things have been getting a bit out of control, a bit weird this week in the cryptocurrency markets. So let's talk about the absolute absurdity of Pepe coin and the meme coin rally it kicked off, two shocking Ethereum realities, and take a look at some of the must-see Bitcoin charts. First, let's talk about greed. It's back, baby. At one point this week, the greed chart showed 69. Fitting number, I suppose. Now, to be clear, a 69 reading is pretty far away from the insane bull market highs we saw back in, 2021, whatever. But it's still a pretty damn big spike considering where we are right now. And saying that things were kind of getting just really a bit silly in markets is what that was showing us. And nothing highlights that more than Pepe coin, a meme coin using Pepe the Frog as the logo. That's about it. Now, a week ago, that had a market cap under $10,000. This week, it surged over $100 million. Yo, by the way, salute to the degenerate ape out there who bought $200 of the Pepe a few days ago and is now sitting on $2 million. That's like winning the lottery. By the way, write in the comment section if you did play with this meme coin, if you did make money on this, or maybe you've just been staying away from all this madness. Too crazy, too high risk. Let me know down below. Anyway, turning $200 into $2 million is the meme coin dream, isn't it? That is the allure of meme coins. Everybody wants to have that lottery winning moment with throwing $200 in and getting $2 million back. Rags to riches overnight, right? It's craziness. But this kind of irrational market greed over useless memes has signaled that we maybe need to take a bit of a breather. Maybe it's time for things to cool off just a little bit even. Maybe the greed was just getting a bit out of hand for these such early stages of a new Bitcoin market cycle. Maybe it's time to consolidate things a little bit here. Now let's talk about Ethereum. Now, an interesting thing to note here with Ethereum is the insane spike in Ethereum gas fees. Once again, it's costing like 20 to 30 bucks just to make a swap on Uniswap or to bridge money over to a layer 2 network, whatever it might be. Now you compare this to the 50 or 60 cents when using something like Ethereum layer 2 Arbitrum, and hey, it's very clear. Layer 2s for the win, man. I love layer 2s. Now this makes me feel, of course, very optimistic about my Arbitrum bags. To the moon, please. By the way, smash up the thumbs up button to let me know if you are sick and tired of paying high fees on Ethereum. Remember, we're probably at least a year away from that situation even being fixed. Also, speaking of Ethereum, something very interesting has been going on recently that I want to tell you about. See, this chart here shows the staking contract. The green bars show new deposits coming in. The blue bars show capital being withdrawn, aka validators unstaking their 32 ETH, and the yellow shows staking rewards being claimed. Now notice that almost no validators have actually exited Ethereum staking, except during the first day, we saw a lot of validators unstaking, but that was almost exclusively the Kraken exchange. They unstaked a bunch of Ethereum because the SEC forced them to shut down their staking service. Otherwise, almost no one is exiting. Now, if we zoom in a little bit more here, then we can see that basically we just have loads of new deposits streaming into the Ethereum staking contract, along with, some people claiming their staking rewards, which is normal and totally cool behavior. But overall, that's insane. There has been no unstaking Armageddon. The market remains broadly bullish on Ethereum, and the people who have been staking their Ethereum remain bullish on Ethereum. And before we talk about the Bitcoin charts, I just want to let you know about the Wealth Mastery newsletter. This is my weekly newsletter that my team and I spend about 40 hours every week writing, finding alpha for you, writing up reports on altcoins, on DeFi, airdrop tutorials, all this kind of stuff and much, much more. And then we pack it into a newsletter that you can read in just about 10 freaking minutes. Sounds pretty awesome, right? It is awesome. It is awesome. You know what's even more awesome than that? You can actually join our over 63,000 weekly readers by signing up for free. Yeah, free, using the link down below in the description. So what are you waiting for? Stop missing out. Now let's talk about Bitcoin. First, check out this insanity because this is pretty damn crazy. Some dude bought over 6,000 Bitcoin 9 years ago, and they have not touched those coins until today. Today, what? When they bought them, they were worth $3 million. Today, they're worth about $180 million. They would have been worth around $400 million at the market peak. That's hardcore, man. Like, really hardcore. My only question is, which one of you was this? And how was your coma, man? Holy cow. Anyway, let's look at the charts. Serious time now. First, the weekly chart for Bitcoin. The price has indeed corrected after nearly tapping an overbought RSI reading. Now, what I'm watching currently is the key price level for support here. Now, that's the red box that you see on this chart right here. That red box represents the key area of price resistance for Bitcoin that we struggled for like a month to get over, right? What we want to see now is for the weekly candle not to fall below that box and to close either just in that box or slightly above it. That would be quite nice. Keep in mind that a retest of this area, essentially flipping what was resistance into now support, is actually technically a good thing. Also, for some perspective here, this is the monthly chart for Bitcoin. Remember, it has only been 3 months since we broke out of that year-long plus downtrend that we were in. In that time, we've already broken out, retested that breakout trend line, the orange line on the chart here, and have put in some serious damn price gains for Bitcoin, the broader cryptocurrency market. Now, I still think we could have enough fuel left in the tank to see Bitcoin go up to 48K this year. That's what I've been thinking about, talking about, fingers crossed about. Taking a look here at the monthly stochastic RSI as well, we can see that previously breaks of the 20 line have resulted in massive rallies for Bitcoin. We're currently under such a scenario right now as we see this green arrow pointing to right here. Now this can actually lead to a situation like the 2015 to 2017 rally where we see just an extended rally where the stochastic RSI showed very bullish conditions. It showed an overbought reading for nearly 2 years straight, which was nuts, man. Or perhaps we have a more short-lived rally like we saw in 2019. One quick blast up to an overbought reading and then a correction. Either way, our current rally has us far from an overbought reading, indicating once again, still fuel and tank, man. That all being said, what is interesting is that today's crypto sell-off was largely a crypto-specific event. Look here, this chart is the S&P 500 weekly chart. Once again, currently struggling to get over resistance, but no big sell-off here for the S&P 500, right? Although many macro fears do remain that could affect equity markets in the coming weeks and months. Rate hikes, oil prices, inflation, looming US recession, 100 other different things, right? What happens next for equities is really important because that could affect what happens to crypto markets. If the S&P 500 breaks resistance, and it really clears the runway for risk assets like Bitcoin to be able to breathe a bit more. If we get rejected here for the S&P 500, then watch out below crypto holders because we do see that correlation and that could mean trouble for our risk assets, aka crypto. Also want to keep an eye on the dollar index, currently sitting at major support. Now, if the dollar rallies here, then again, it could be bad news short term for equity markets. And what's bad news in the short term for equity markets means bad news in the short term for crypto markets. So it's definitely something to watch out there for. Okay, that's it. Subscribe now. I'll see you next time.